TradingNut, episode 40.
My mentor taught me one thing, and it works for him. But it doesn't mean it will work for me.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the TradingNut podcast. I'm your host, Cam Hawkins, and today we've got something a little bit different again. So I've got, I actually went through my archives and I found an interview that I did that didn't get a lot of airtime. In fact, I think it was removed from the feed pretty soon after it was actually put up there. And I think this was when I went from a free podcast to a paid podcast before I went back to a free podcast. And anyway, I found this interview. It was my 52 Traders update. Even if you have heard this, you've been a long-time listener, then you're going to want to listen to it again because there are actually... I mean, I haven't listened to it for ages. And there's so many nuggets in here, not necessarily from me. In fact, what I say can be pretty much disregarded. But what Harllan, who was on the show, who I was interviewing, what he says is really interesting stuff and useful for you to take notes on and really apply to what you're doing. So guys, this is coming up. It's an exclusive rerun with Harllan, my 52 Traders hidden interview is now no longer hidden. It's up here for everyone to listen to and take notes from. And what else was I going to say about it? Oh, yes, that's right. We've got an ebook as well that I wrote, which was the sort of foundation of this interview. So we went through some of the questions in the ebook during the interview, but you can download that ebook in the members area of TradingNut. So head over to tradingnut.com to get access to that ebook. It'll be in the free gift section in the members area. Okay, so it's quite a long ebook that I wrote around my lessons of interviewing 52 traders based on my 52 Traders podcast. So you'll take some nuggets out of that as well, I promise you. So guys, please do jump on the website and grab that. Now, look, if you do want to hear more of the 52 Traders podcast interviews, then there's a few ways to do it. So number one is you can actually buy individual episodes. Or number two is you could join the Robot Traders Club, and just for being a member, you get credits to episodes as well. So you could do that. And whilst you're there, you obviously also get all the trading robots that I'm building. And if you're not familiar with how it works, basically you guys go on there. If you've got something you want to automate, a strategy, and you're happy for it to be shared with other people, other members, then what we do is you guys go on, give me your strategy, I'll build it, and you get access to it in the future. Okay, so that's how it works. It's pretty simple. And then, look, if we find something that's really good, then if you're a member at the time, you're going to get access to it straight away. It's pretty simple, guys. Jump on, give it a go, Robot Traders Club. Now, so that's number two way of getting credits to get interviews of the 52 Traders podcast. And number three way is to basically buy the whole thing outright, get all 154 episodes, listen to it on your smartphone as you're going, just like a normal podcast. And get all the show notes pages with the videos that are on there, the copy, the notes, images, charts, marked up charts, a whole bunch of information there. Really, really good foundation to, I suppose, get you to the point where I am now. I interviewed so many traders and find out what really makes them tick. So, guys, this is where this hidden interview comes from, and there's actually a couple of others that have never seen they have one seen the light of day, and actually no, the other one never saw the light of day. I don't even know if I'll release it, but they might be coming up in the TradingNut podcast again in the future, so stay tuned for that. Now, what else can I tell you? Look, there's a couple of other little housekeeping things here. I've got an interview with a trader called Just Some Trader coming up. Now, it's an undercover, really sort of deep, dark, who knows where this guy's come from, doesn't want to be known, but he's on Instagram. You can go and check out some of the trades that he's taken, like laser focused, laser sharp entries, and you see like how much he's trading, the lot size. You also can see his bank balance or trading balance, which is like huge. And I'm going to interview the guy in the next few weeks. So please, if you have got questions you want me to ask him, very specific questions, I will ask those questions for you and get them aired on the show here, and we'll have a fantastic episode. So guys, please check him out on Instagram. Now, what was the last thing I was going to mention? Oh, look, thank you very much for filling in the survey if you did. And if you haven't, then jump on the Facebook feed. You'll be able to find a link to it there. It's the Traders, what did I call it? The TradingNut Traders Survey 2019. Now, before we get into the show, guys, I do want to sort of reflect on something that occurred to me this week. Now, I'm trying to get my brain in the right mindset or the right space to sort of work out how I'm logically going to explain this to you. But something occurred to me. Oh, yeah, that was it. So we sort of go, as human beings, what I've noticed, and I don't know if you guys notice the same thing, but we go from procrastination to impatience, right? So we literally, we go from one extreme to the other. So procrastination is extreme patience to go and do something. When you sort of flip it around to that sort of, I suppose if you flip it around, and then impatience is complete opposite of what you're doing with procrastination. So you're literally trying to get something done as fast as possible. You want it to happen as fast as possible. You're impatient. I see this happening so much with my own, not just trading, but other things in life, right? So, for example, this week I decided that I'm finally going to actually advertise the podcast episodes on like social media. Okay, so put some money behind advertising the podcast episodes on social media. Something I've been thinking about doing for the last 4 years, and I've never done it. And I know how to do it. There's nothing technically stopping me from doing it. And I remind myself once a month, I should really try and advertise these episodes on social media. Never happens. But then somebody said to me, hey, why don't you advertise the episodes on social media? And I was like, right, I'm going to do it. It took me about 30 minutes to set up, to get the thing going, and then all of a sudden, I'm like in the impatience mode. So I've done the procrastination. I'm now in the impatience mode of, why aren't my ads approved? Why haven't they approved my ads? I'm looking every 10 minutes. My ads still aren't approved. When are they going to go in there? Then it's like, when is somebody going to click on a link in one of my ads? The impatience set in, and I was like literally wanting to see when somebody was actually going to click on a link and how much it was going to cost me, and then so on and so forth. Now, the same thing happens with trading, right? So somebody puts off buying a system, like learning a system, whatever. As soon as they get it, they're impatient. They want to get through the course as quickly as possible, take no notes, and then start applying it in the market there and then. So, guys, let's just think about that. How is that affecting your trading, okay? Are you procrastinating on some things, and then is it backtesting you're procrastinating about? But then you backtest, you get one winner, bang, I'm in the market, I'm trading. Or is it something else? I mean, where's the procrastination happening, and where's the impatience happening after it? And we have to flip that around. We've got to flip that around, okay? I don't know how to do it. I haven't got suggestions on how to do it, but I think just being aware of it is enough for most people to try and make the change. So hopefully that helped. I know I went on a little bit too long here in the intro on this one, but guys, trust me, what you're about to hear is going to be some fantastic stuff. Take notes. I do urge you, please take notes. Some great stuff here from Harllan. I'm going to try and get the guy back on the show in the future. Haven't heard from him in a long time, so let's see how we go. All right, enough from me. Let's do it. Okay, so guys, I've got Harllan on the show now. So Harlan's going to help me go through some of my 52 points that I've got here on the Top Shelf Traders article that I've written to wrap up my 52 traders goal that I set myself, interviewing 52 traders over the course of 1 year. And we're just going to go through some of the points that I've got here, and you guys can jump on and have a look at the full article at 52traders.com/top, and that should redirect you to Top Shelf Traders, where you'll see the full article with all 52 points from the show. So if you've just tune into the show, then dive on there, and you'll probably save yourself a whole bunch of time. But I do recommend actually jumping on and listening to the other episodes, because they are full of really good advice, and I'm sure you will take out different things than I have, and everyone's a bit different, so it's all a matter of opinion when it comes down to it. So, Harllan, look, thanks for joining me here today to go over it. How are things with you anyway?
Nice to be back, Cam. Everything's doing great.
Cool, brilliant. Okay, so look, so I'm going to pick out some things here. So I've broken this article down into a few sections, and the first section is your introduction to trading, right? So does that correlate to your chance of success? So I'm just going to pick out one here. So we're not going to go through all 52 of them, and I want you guys to jump on there and read them for yourself. But I'm just going to pick out one. So the second point here is, what about using a trading mentor? So actually, I'm not going to pick that one because it references the one above. I'm going to pick it. I'm going to pick number 4. So, what if your parents traded and sparked your interest early? So, a number of my guests were introduced to the markets because a parent had got them into investing, or placed a trade, or placed an investment on their behalf at a very young age, and sort of used it as a bonding experience where they, met up with them on a regular basis, or gave them the paper and showed them where the stock had moved, or the investment had moved, and whether or not they were making money or not. And it seemed, and my view was, that those that did have a parent get them into investing and trading, or investing probably more to the point early on, seemed to have an advantage purely because they had, if they got into it, if it piqued their interest, they had a good, so I suppose, positive correlation against trading. So, trading now, or investing was, in the markets, was always attached to a parent and a bonding experience, which is a sort of positive reinforcement there. And secondly, I suppose they had an advantage in terms of they just had an earlier start. So if you, left home and thought, right, I'm just going to carry on, I've got a bit of a passion, my dad, my mum's sparked my interest, then you had that sort of advantage to carry on, get out there early and start your education with a lot more time in front of you, and a lot more appetite for failure, and a lot more, you're a lot more sort of, not necessarily naive, but you're able to bounce back from anything that was going to hit you. You had the time, you had the sort of patience, you didn't have the experience. I mean, what are your views on that, Harllan?
I think I do agree in a certain level that you do have an advantage when you have parents or mentors that has gone before you and who teaches you on how to trade properly. In my experience, I have a friend who has a parent who's one of the biggest stockbrokers here in our country. And what I noticed is it didn't make him, what he said was, it didn't make him a successful trader in the beginning, but it planted good seeds of foundations, like on how to treat the market like a real business, and on how to manage their risk. So at an early age, he was a businessman. He was selling cars when I met him, and most of the business decisions that he makes is based from how his mom would manage risk, and he learned that from her being a stockbroker here, and so that made him interested into going into trading stocks when he turned 30. So I think he's quite successful here, and I think it made a lot of impact. So the only thing that I could say is that it's also a weakness, because he told me that he had a lot of because his mom was a stockbroker. Then when he came into the industry, he had a lot of presumptions about the industry, and so it was hard for him to learn some of the things that the school was teaching him about trading.
I understand.
And so and so it was quite a hindrance at that point. But when he did his when he paid his dues, he studied, he did this his time uh, doing the work, and then he finally combined the ideas, and then it became more real to him. So I think it is a good jumping point, but it will not sustain you if you won't do the work.
Yeah, so it does. I think the answer is it does definitely give you an advantage, potentially over other traders there, but it might, to a certain degree, probably give you too much insight before. It might actually sort of trim off some of that sort of freshness that you have. So you're already you've jumped in almost a little bit in the deep end as opposed to coming in at the shallows. So yeah, it could work. Look, I mean, there's a few other points in that section which I think you'll find interesting, and you'll sort of work out whether or not. You'll work it out for yourself. Jump on there and have a look. Right, so let's move into the second section, which is probably more something you can sink your teeth into. So this is about education, and so the key to success, is education the key to success, and what exactly should you be learning, and how, I suppose, should you be learning it? So there's a number of points in this section which I'm going to pull one out, and this one talks about using education on the internet and how to do it successfully. So the one interview that really hit home with me was with Peter Davies, when he talked about this guy spent a lot of money on education, tested a whole bunch of stuff, and it just didn't work. And then, I mean, what he essentially worked out, and I think this was also reiterated by a couple of other traders out there, was that going on the internet, it's all about sifting through the rubbish that's in there. So there's a whole lot of rubbish, but you got to sift through it. So you got to spend that time. And the key thing is, I think, that he was talking about was verifying it for yourself. So you've got to verify everything for yourself. Don't just take what somebody tells you and apply it. You need to verify it first, especially if you're going to put real money behind it. I actually watched The Big Short a couple of nights ago, and there's a guy in there played by what's his name? The guy from The Office. What's his name? The guy from The Office.
I forgot his
Steve
name.
Steve Carey.
Steve Carey, yeah.
Yeah, so Steve Carey. So he's playing this guy. I can't remember the name of the guy either. But anyway, he had to verify everything, and this Big Short, all the sort of information that he got given, he still had to go all the way to Florida and find, get his team to go and knock on the doors of people that were actually losing their houses, or about to lose their houses, or had mortgaged themselves up to the hilt. And then he even went to Las Vegas to then talk to some other people about even, I think it was the CDOs and how they were structured. And then finally he realized that, yep, okay, we've got an opportunity here. So it is about verifying what exactly is out there. So don't just trust it blindly and go, okay, well, this guy seems to know what he's talking about. Go and verify it for yourself. So that was one of the sort of key lessons there. So it's all about you sort of, go, look, I mean, by all means, use a mentor, use somebody who's a professional, but make sure you verify what they're telling you, because you might have misunderstood it. What are your thoughts there, Harlan?
Well, I do believe that there are really genuine websites or educational websites, because I started learning how to trade through the internet, and I paid a lot. I spent a lot of money on education, and at the end of the day, I found out that everything works, but you need to really understand what the person is saying. And in my experience, if that person that is selling you a program or a system, if they're trying to sell it to you in a way like it's too good to be true, most of the time they're hiding something. And if they're not telling you the reality behind it, like for example, I have a system that will make you tons of money in X amount of time. It just doesn't happen that way. When I was introduced to trading, I lost a lot because I was living in a dreamland. I was fed a lot of stuffs that I could really do this. This is going to be easy. This is going to be a walk in the park when you sign up for $1,000 course that has 3 videos that is the secret to trading the markets. And so what's wrong with that is it built my ego. And the problem with having an ego in trading is that if you don't understand that it's a system, it is not just a one-time trade, you're going to lose because you will be hating how to lose. And when it doesn't, like for example, if you try the system and then you win once, twice, thrice, and you think you're on a roll, and then when you begin losing, you begin to realize that this stuff doesn't work. But in all reality, that system was built on a ratio of winnings and losing. So that guy might be telling you that in 100 trade you would be winning like 70 and you would be losing 40, but they didn't tell you that. And so you would be frustrated, and so you would stop because your ego has set in that I thought I bought the greatest system in the world and I thought I was great. So every time you lose, you wouldn't accept that you're losing, and you would do a lot of revenge trading.
Yeah.
And you wouldn't stick to the program.
Yeah, I think you're right, yeah.
Yeah, and so I think that there are legitimate education out there, but you have to see through whether they are just marketing something or is really something that could carry on for a long time, because everything works. In my experience, every technique works. And I have a friend who he loves to buy robots. And when I met him in 2007, he bought around more than 500 robots from the internet. And all he said was, all robots are not working and this and that. And then when we met this guy from Hong Kong who runs a fund company, they're running an automated system and they are profiting from it. And so everything that he believed that automated programs that run trades doesn't work was shattered. You must have imagined how he felt. It's like his world collapsed because what I'm trying to say is that when you think that you know something, that's the beginning of your downfall. Because when you focus on one system or one education that you think you know the secret to this thing, it's wrong. You just have to do the work. You just have to build your own system into it. Because my mentor taught me one thing, and it works for him, but it doesn't mean it will work for me. It's like playing a game of ball. It doesn't matter how expensive the ball is. It's who dribbles the ball, who manages the ball. If I was given a basketball, I could score 15 points in 16 minutes of play. But if you give the ball to Michael Jordan, he would be scoring more than 100 in 60 minutes. So the same with the kind of education you find on the internet. The same of the programs that you buy on the internet. It's not how much the program is, it's how it's the mastery of using the program. That's what I think.
Yeah, so true. I think so. It's So sort of I suppose you're sort of backing up what I've got here in terms of it is very much about validating it for yourself and
yes,
making sure that even though somebody like Peter Davies or whoever it is teaching you something that a way to actually profit from the markets, you still need to validate it for yourself, and you still need to, and I think what you're saying here is you still need to make sure it works for you. So it might be their system that works for them, and it might be like, for example, I play a lot of football, and I don't beat players with my dribbling skills, and I don't do a lot of dribbling. I'm more of a sort of 1-2 touch, pass it, and I'm really good at passing. I'm great at passing. I can find somebody from distance, etc. But when it comes to like dribbling and beating somebody, I can do that if there's a space and a gap, but I can't really sort of take somebody on, trick them. 9 times out of 10 I'll fail, and 1 time I'll get it right. But if somebody said to me, right, all you're going to do is dribble and beat players during the football match, I would be rubbish. You're not allowed to pass it. If somebody said you're not allowed to pass it, I would be absolutely rubbish, and I'll probably be sitting on the bench most of the game. So I suppose, so what you're saying is it's even with, if you take a sporting analogy and bring it into trading, it's the same sort of thing. If somebody, even though it's an easier thing to do in terms of, you are clicking a button and everyone can click a button or everyone can decide on entering a trade at this point, but I suppose it's the your mental approach to it after you enter that trade and when you exit it, and how that affects you mentally. So so I think we can sort of draw that analogy around sport and trading. You're good at some things work for you, and some things won't. And if you learn from somebody else, you still need to validate and verify that it will work for you, not necessarily that it works. Because from what you're saying, pretty much everything works, but doesn't work for you. Yeah.
Yeah,
Okay.
I think Einstein put it the best in the best sentence. He said, like, if you judge the fish in his ability to climb a tree, then you wouldn't be doing justice to the fish, because some traders they are not traders. I just want to be honest that if you're someone who believes that trading is for everyone, then you're living in a dreamland. It's not for everyone. But I'm not saying that everyone could not earn from this. You just have to determine whether you are really a trader or you are just someone who really enjoys making money. Because if you are someone who just wants to make money, then maybe a different approach is for you. Like you need to invest into a fund to earn money, because you like the market, you like price movement, you like everything about it, but you are not just skilled, or you won't be having the patience to study and to give the effort to pay the price for years, for months, and doing back testing and doing your or maybe this is just something that is not for you as a trader, but this could be something for you as a manager, a portfolio manager, and that could be different.
And on that point, I mean, let's move on, because I think you're sort of touching on some of the other points that I've come up with here in this 52
sorry
point article. That's okay, that's fine. Look, so the next section is around how much attitude plays a part, and I think you're sort of touching on that. So, so one of the things I'm going to pull out a point here, which is how do you deal with failure? So that's the question I've raised, and the answer I've got here is trading is all about how you deal with failure. So a losing trade, blowing your account, wasting time on a poor strategy, wasting money on education that doesn't work. There's heaps of things you can actually fail at with regard to trading. So to be successful in this profession, you need to take the positive from all the minor setbacks. Some books that I think I've mentioned in the past, that like Obstacle is the Way, and there's another one. So that actually, no, that's a good one. The Obstacle is the Way. So it's essentially like if you're failing at something, that is probably what you need to do to move forward. And like an example would be Vladimir Rybakov, who I had on the show, and he basically lost all his parents' money, but managed to take that and move it, not take the money obviously, but take that experience and build upon it as like a growth experience. So I think the key learning here, well, the key learning for me is that failure is a part of the trading experience, and the only solution is to accept it as a growth sort of experience that you can learn from and move on. So what are your thoughts there, Harlan?
Well, I think my take on this is I have a different perspective about this. I think that if you say that you are failing, you have to realize whether you're really failing or you're just stubborn. What I mean is, if you are failing, then it just means you're moving forward. But some people are just stubborn. They know what is wrong, and they're still doing the same thing over and over again. So that is not failing. That's just being stubborn. That's just not learning. Because the reason why 80% of the education doesn't translate into efficiency is because the person who's trying to study a system or a knowledge is not willing to apply what he learned. Uh, one of the traders that I met uh, told me, and I remember this vividly. He said that it's okay to give away your techniques, your skill to everyone. So why is that? I said that it must be a secret. If it's going to make me money, then why should I share it? Because he said 90% of the people won't take action. And it hit me like, yeah, I've heard a lot like people during New Year would have New Year's resolution, and they would say that they would go on a diet, they would stop eating so that they would do exercises, and then the reason they stop after a week, after a month, is because 90% of the people won't take action. And when I say take action, that would really grasp the idea and then would be really willing to see it through, to see the results that they're waiting for. And so when 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 you talk about failure, most of the people that I know who have overcome failure is that they know when to say what I mean. They know when to quit. If they know that this is a dead end, they turn around immediately and not stay there for long. Like if a system is not going, if a system is uh, not going to give you any profit, but sometimes you stick to it because of your ego, because I want to prove that I found the right system. Or sometimes, yeah, you're someone that is moving your stops always, and you know that is the problem. It's not a system, but you keep on moving your stop because your ego is so big now that you don't want to lose. So it's not about trading support and resistance. It's about sticking to your management plan. And so when people fail, I think it's more on knowing when to quit, and then knowing when to say it's enough. And then if you know when to quit, then that will be a great thing because you would know when to start again.
Yeah, so it sort of comes back to psychology again. And the funny thing is, like, when I asked people what they wanted to hear on the show, I mean, it was sort of came back, they want to hear more strategies. And
yeah,
they want to hear more strategies. They want to know what strategies work. I need a strategy that works. And psychology was like the lowest thing. Money management was above psychology. But I think, to your point, psychology isn't necessarily the psychology within a trade, and when you're actually placing trades and trading, it's also psychology around education, around external factors to trading and how that impacts your trading, just your general sort of person, your personality type, all that sort of stuff has an impact on your, and this is the next section, your approach to trading as a whole. So I've done a section on your approach to trading. So your attitude to trading I found was a key thing. And then do I have the right approach to trading as a whole is the next section I had. And so let me pull something out from here.
Okay.
Let's see which one I'm going to pick out. Okay, this one. I'm going to pick this one out. So the money would be great now, but do you have the patience? So yes, one of the reasons I started trading was for the money. I mean, I heard of a guy that I knew him personally, and I knew that he had made $500,000 in 6 months and was on track to make $1 million in a year. And I was like, okay, get me into this. I want that sort of money. So you can see it there, you can smell it. I mean, you can literally see it on the charts. You can almost touch it. But remember, for the first 7 years, you're probably not actually going to be able to keep any of it. Okay, and when I say 7 years, that was the average time that it took most of my traders to become profitable on the show. So being patient is key. So playing the long game. So you've sort of talked about it already, Harlan. Knowing this will probably reduce your 7-year wait, and as it will eventually did with like one of the first guests I had, which was Serge Berger, who actually talked about patience being sort of the key thing for him. As soon as he understood patience, then things became a lot clearer. And I'm sure. I mean, look, the guys who have been doing it for, I think some people have talked about 20 years before they became consistently profitable. I mean, you've got to have that sort of, you've got to be patient. You've got to be patient. At least it's going to take you 6 months. So some of the guys that, do well have done it within 6 months, but, it's patience is key. What are your thoughts on that, Harlan?
I do agree about that because this is a patient game. This is a patience game. And that's why I told you that I don't think that trading is for everyone, because not everyone is patient. And if you're somebody who's not patient, then you might consider thinking of getting a system that doesn't require you to be physically attached to a trade, because money is something that moves the heart. Where your treasure is, there your heart is. And so that's the reason why a lot of people don't really learn or doesn't really become profitable in trading, because there is a string attached to their heart, and then it's connected to a button. And then when you press that button, your heart starts pounding fast. And when you lose, it sends an electrical signal to your heart, like a short circuit that shocks you, and then it makes you more impatient, because you wanted to get back the money that you lost from that trade. And so being patient is key, but I think that not everybody has the patience to really learn the trade. Actually, when I came into your show, I think was it a month ago or a few months ago, some guys have emailed me, and they were telling their stories that they've been trading for this X amount of years and they've been failing, and so I told them I was trying to help them and I was trying to teach them, and I didn't start with technique, because they were asking, what is your technique, how do you trade? I showed them how I traded. I showed them my live trades, and they say, wow, how did you determine that? Why did you choose this currency pair? Why did you choose that trade? And you got this X amount of pips. And I told them that it was because of experience, and it was because I understood what is my limit. I understood whether or not I would enter or exit that trade. That made me decide to take on that trade. And through the years, I realized that it is not about having the right entry. It is having the proper timing. Proper timing gives you more profit than having the right system for an entry. Because I was a scalper and I trade on the M1 chart when I started, and I could make 100 pips in 1 hour. And so you see, I have trained myself to be precise on my entry. But why is that it took me around 2 to 3 years to be profitable? Because I would be getting, in a week, I would get, I think, 1,500 pips. And in the evening, I would be losing the same thing. Because I was impatient, because I know I have a power to enter anytime. But when I matured into the trade, I realized that I don't have to take every trade. I just need to set my goals, and I just need to enter at the proper time and exit at the proper time. So timing is very important. It is like a business. You don't go selling ice cream when it's winter. You don't go selling soup when it's summer. It's the same thing. You have to, if you want to be a successful trader, you have to be realistic, because I was in dreamland for a long time. I wanted to stay positive. I wanted to be passionate. I wanted to stay into the trade. But then I realized that if I would try to fast forward the season, or if I would try to compress or be quick into getting the money, because let's face it, everybody who goes into this business is for the money. This is something that makes you a living. But if your only purpose is for you to earn money from this, and you don't weigh the consequence, I mean, you don't understand that there is a price that needs to be paid, then you're living in a dreamland. And if you're somebody who's just beginning, or you're somebody who's not yet profitable at this, you just have to wake up from that dream, that you have to face the facts that it is expensive to learn how to trade. It takes a lot of time, it takes a lot of effort. But if you play your cards right, you could do it. It's not just about a matter of not quitting or not giving up. It's a matter of being able to learn from your mistakes, being able to learn from the mistakes of other people. Because what I hear from most people is that they only want to talk about the positives. They are like a YouTuber who shows you the great stuff in their life, but doesn't want to show what happens behind the scenes. They don't want you to see that they lose big time because they need to sell something. And so I do agree on that thing, that this is something that needs patience, because it's all about timing. Investment is about timing.
And when you're talking about timing, are you talking about what exactly are you talking about?
When I say timing, like for example, like what I said, I trade anytime, because I know I have the skill to enter a trade, and I know that I could win this, right? But when there's like for example, today's NFP, I don't trade it anymore because I know that the trade could be erratic, and so I avoid that. I don't understand that before, why some successful traders doesn't trade the news, but now I do understand, because it's just I'm just telling my mind that I am content. When I say timing, you have to learn how to tell yourself when are you contented. And like December would be for me, it's a season that doesn't produce much for me. So I won't force myself to trade this month, because there's not much volatility for me on the pair that I trade. So I don't have to earn money for this month. And so that is the reason why you need to have a system, because it's timing that will save you and will give you the profit that you need for a certain amount of time, that will carry you through the seasons where there is a low time.
So yeah, it goes back to greed, I suppose, and being greedy, you're going to be trying to place trades when you shouldn't be placing them, and you know there's no real need to place them, or I suppose what you're saying is when there's external factors, which means the price could really go anyway, because it's going to be fundamental news, and you know whatever pattern you've seen or whatever entry set up, if you're just purely technical, is going to be overridden by the big boys looking at the fundamentals.
Emotion.
Yeah.
Yes.
Yeah.
And like for example, you're a living being, and there are things that happens in your life. Like for example, if somebody died in your family that is dear to you, you would be emotionally stirred, and that is not a great time to trade, because it would affect your emotion. It would affect your decision making on the charts. The trades that you usually make doesn't make sense anymore, because your mind is clouded. That's why I think an automated system now is better if you could really automate your trading, because it detaches you from it detaches your emotion from the trade, and it just makes money for you. And that is the ultimate goal, for us to profit in this.
Cool. Right, let's move on. So then the next section is around trading strategies and actually talking about emotion. So the one I'm going to read out is, first understand what is at the heart of every price movement, and you can come up with better strategies. So this is all about, and we're talking about robotic as well. So although price movement looks robotic and electronic, there's one single common element behind it, which is human emotion. The number one finding when it came to strategy development was that there's always a human emotion behind every price tick, up or down. Yes, they may be working for an institution, but those institutions are run by humans, and institutions are made up of people with emotions, shareholders to please, targets to meet, etc. And the same goes for robotic trading. So even though robots are placing the trades, a human or team of humans are behind the creation of the robots, and their fear and greed is being played out electronically. So when constructing a system, understand the emotion behind why the price is moving, and you'll be better off for it. So I think that was sort of one of the key things which, when I first started out trading, was very hard to get my head around, because it's like, but you know, this is price ticks going up and down. How can there be surely no one else is emotional, because I feel that I'm not emotional about the price movements. so therefore nobody else should be. That was my original sort of starting point, and now it's like no, and I even still to this day struggle with the fact that no, it is an emotional. There is emotion behind every single price movement, and understanding that and being able to sort of adapt that to a trading strategy is going to make a more profitable strategy from what I understand. Thoughts?
Yeah. So, yeah, I think that is correct. I do believe in that if you are going to succeed in this, you need to really control your emotions and understand the emotion behind the market. Well, what I've learned is that as humans, we work in patterns, and you could not change that. Like what I've said, a lot of people wants to change, but they don't change because of the patterns that is encrypted into their minds or encrypted into our daily lives. Even if you want to change, let me give an analogy. We see this every day. We see politicians make promises, right? And then after they win, they won't 100% fulfill the promises that they make. And the reason behind that is because they know the sheeps or the herd wants to shout change, but doesn't really want drastic change. They want to take it slow. So even if they won't be able to fulfill 100% of everything they talked about during the campaign, it's all right with that. Isn't that fascinating? It's all right, because people are so encrypted with habits, and economics is the same thing. Even if they say that you don't have any basis for technical analysis, but the charts won't lie. It's the same thing. It goes up and down. It will always go up and down. It will consolidate. And the people behind this have the same emotions as the people that are trading. And that's why I think that the numbers represented on the charts that we see every day is the summary of the emotions of people. And that's why I like technical analysis, because it doesn't give you the typical BS. It just shows you what the emotion of the market is at the moment, and you just need to respond to what it's doing. You cannot control it.
It's sort of like if you're looking at getting whipsawed out of a trade. It's very much. I mean, it's either going to be your money management is off kilter and you've risked too much for your balance, or you just haven't got a bigger balance, and somebody else has, and they know that I can actually scare the bejeebers out of you, that you're going to have to exit your position and give me essentially your investment.
Yes.
And so, I mean, it's one of those things that took me ages to really see and understand, but and I don't know if I can fully apply it at the moment, but it does definitely. I can definitely see it now, see it happening, and understand why it's happening. So the next part I talked about was money management. So I did a section on money management, talking about money management. So the one I'm going to pull out here is go for a percentage stop loss and you'll be a happier trader. So I'll be interested to see what your thoughts on this are, Harllan. But so what I've talked about here is, and it's once again back to psychology. So a lot of the traders I interviewed preferred using a percentage stop rather than having a fixed stop. In my opinion, this allowed them to endure bigger drawdowns without the mental anguish or being concerned with how many pips or points they were away from the entry. They could only ever lose a percentage of their account, and they were content with that. So it's really a percentage stop loss, not necessarily saying it's a smarter way to trade, but from a psychological point of view, it'll help out the guys who are. It basically helps traders out because they go, well, I don't really care how, from a dollar point of view, from a pips or whatever point of view, distance point of view, I'm going down into drawdown. It's more the fact, well, I haven't lost 5% of my account, and if I do lose the trade, it's going to be 5% of the account, and that's all it's ever going to be for that day. What are your thoughts on that? Have I completely got that wrong, or what?
I think there's a balance in that, because I used to be a percentage trader before I became a fixed stop trader. And the reason for that is like what you're saying. And I realized that people who are trading in percentage are those people who have been hurt so much, like me. They just don't want the stress of having to battle that kind of move, and then like what I said, it's all about ego. It's you battling yourself and trying to make yourself believe that you are able, you can do this. And that's why I took that path before when I was beginning, that I have a certain percentage as my stop and I don't have a fixed stop. But when I started trading, when I started scalping, I need to have a fixed stop. And it made me realize that if I have the skill to win 100 trades and lose, like, let's say 20, then I would still be winning. Or there was a time when I was managing an account, a big account, and I have lost 40 trades and I have only won 15. But I was still up 10% into the trade because I have a fixed stop. Because my system is fitted to that. But there are some systems that doesn't fit into that. Like I think most of those people are long-term traders, or they are day traders, or they are swing traders. And so imagine the torment if they would have a fixed stop when they are trying to wait for a big move, because it will move up and down before they get it. And so I think it's about whether a system is for you or whether the system fits that kind of strategy or that kind of money management mentality. It's not about what is right or what is wrong, because like what I've said, everything works. It just depends on your personality. It just depends on how you use it. I won't stand here and say that is wrong, this is wrong, because there are some ridiculous techniques, the ridiculous money management that works for some people that I know. So I won't be judging them. But for people who's just trying to find out their way into this, I think a fixed stop would be a safer path, and then you could adjust from that.
Okay, that's interesting. Hey, look, I'm just toying up here as to whether or not I go into the psychology section here. I know we've talked about that quite a bit, and a lot of the learnings from the show have been around a psychological point of view. Sorry. So here we go. I'm going to reel one off, and then we'll wrap it up with the last 4 points. So this is a very strange approach to trading psychology, but it might work for you. And it's just a tip. It's probably the weirdest approach I heard on the show today. And this was from a guy called Anmol Singh from livetraders.net. And he would pay somebody he didn't like $50 every time he would break one of his trading rules that he'd set himself. It eventually became so painful that he had to stop breaking his rules. So if you've got anyone you don't like very much, then you could apply that. And trust me, I'm sure. I suppose the thing is, would you actually pay them the $50? That's the thing. Can you actually pay them the $50? Have you got the discipline to do that? Even just do that. So look, that's an approach. I won't get you to comment on that, Harlan. But what I might get you to comment on, and I was sort of toying up whether or not to let people jump on and read this full article, or give them sort of the conclusion of my 52 points. And the last 4 points of the article are actually 4 words, so I think they're so important. And you've already really touched on it to a certain degree during the conversation. And I'm not going to tell you the 4 words, so you can go on and have a look at the 4 words. But the general premise of the point that's sort of the major outtake that I've taken, or takeout that I've taken from the show to date, has been what you've talked about before, and it's very much about the fact that of all the lessons that I've written down on this page and then in this article, and of all the lessons that have been taught to me or told to me by yourself and other traders out there, there's still some things that I either don't agree with, or I just think that's too hard, or I think, but there's something that I know better. I know better for whatever reason, even though I've got nothing to justify it, nothing to back it up. These guys are the ones that are doing it and out there teaching other people how to do it. I think I know better. So it's really, of the list of the things that I've put down in this article, there's a whole bunch of them, and I guarantee you'll read through them and go, oh, yeah, that's great advice, but I'm not going to do it. I'm not going to do it because I'm above that, or I know better, or I can do it without, I can trade without doing that thing. And I'm saying this knowing that full well that there's things that I'm not going to do. So I'm like, I'm just as bad as everyone else out there listening. So I think, and you sort of touched on it before, Harlan, maybe you want to give us a bit of a wrap up here on your thoughts. I'll give you an analogy of, or a little story of a guy first. So this is a guy I was talking to on Skype, and I told him about a system that could make $1,000 a day. And I'd interviewed a guy who's coming up on the show soon. It's a system that makes $1,000 a day. And he was like, look, how can I get hold of it? And I'm like, here's the link. Here's how you get hold of it. And then I mentioned to him the fact that at points this guy will hold a 700 pip drawdown to get his $1,000 a day. And he's like, oh, hang on a second, I don't want to do that. I don't want to hold a 700 pip drawdown to get $1,000 a day. So therefore, I'm out. Don't even send me the links. I'm not looking at it. But it's like, okay, well, I've just told you how to get $1,000 a day, but the sacrifice is a 700 pip drawdown at points, and he knows automatically, well, I don't want to make that sacrifice. I can do it a better way. Well, are you making $1,000 a day? No. Through trading? No. But if you're happy with the 700 pip drawdown, well, I don't like that. I don't like that idea. So anyway, what are your thoughts, Harlan?
I do believe that no one is exempted from that in the beginning. It's how you talk to yourself. It's how you prep your mind into it, because everybody wants to be better than somebody. It's human nature. That's why in any country, I think there's a dog eat dog mentality, because I want to be better than you, and it's not totally bad, because it gives you the motivation to really study and stay. But I always remind myself that my strength is always my weakness. If I am so hard-headed about achieving something, that would also be my weakness. And so without a piece of humility in me, no matter who mentors me, I won't be able to learn. And like what you said, the secret to success in this or in any business is that knowing the price and paying the price, and that's basically it. Because like for example, if you're someone that doesn't want to pay the 700 pip drawdown, then that thing is not for you. If you believe that you could do better, then I believe too that you could do better. But what is the price, or what steps do you need to take for you to prove that you have a better way? Because what's better for you might not be better for them, because it depends upon the level of their emotional stress capacitance and how they handle stress. Because this is what's funny. If I lose $20,000 right now, that wouldn't be big for me, because I have lost more than that in less than 15 minutes. Eh, So for some people who loses $100 and wants to kill themselves, so they have a lower, stress capacitance, and so I wouldn't blame them if they take a different approach to trading, because for me it's just numbers, but I have to balance it out that it's also a business. You just can't lose $20,000 every 5 minutes, right?
Yeah.
And, and so I wouldn't say that this, like what I said, it's not a matter whether something is right or wrong there, but it's a matter of how you view things and how you turn. Where do you turn from something like your strength is always your weakness. When are you going to use a circumstance as your strength, or where are you going? When are you going to turn it into a weakness? Because it all depends to you. It's all about your adaptability. It's all about your eagerness to to adapt into a situation. Like what you said, that guy was willing to pay $50. Is it $50? Was it $50 to
Oh, yeah, $50 to a friend, yeah. Oh no, sorry,
to a
friend. I mean, a friend he didn't like.
a friend he didn't like?
Yeah.
And that is and that is the point of mentoring. What he needed was a mentor who will be accountable to them. You know what? People go to mentors and they don't succeed because it's not about what the mentor teaches. It's whether or not they are willing to be accountable to that person. Because the moment that person corrects you and tells you straight up, "Hey, you're doing this," and you don't want to face the facts that you're moving your stops, you're not following the system, you're not making your trading journal, then you would go away from that mentor. The same thing, and then it would repeat over and over again, no matter who you find to teach you, because it's all about your heart. It's all about your 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 acceptance of facts. And so what that guy did was just, it works for him to pay somebody he didn't like, because in essence he was just trying to find someone who's going to be accountable to him. And if you're going to be trading or become a real trader, or who's going to trade discretionally, then you need someone who's going to be accountable to you. You need someone who's going to tell you, "Hey, you're doing," because you can see everything. You can see everything. And so uh, I do agree on that point, but I think that there's a balance to that.
Okay. So just to wrap up the show, which I think, look, I mean, jump on there, guys. Jump onto 52traders.com/top, and you'll get redirected to the article to have a look. So to wrap up the show, Harlan, I mean, given the fact, I assume you've read through all the points that I've got here, or I mean, have you read through them? I should ask.
Yeah, I've read through them, but
Yeah.
I haven't read everything.
Yeah. Okay. So he's read through the majority of it. It's a fairly long article, so take the time and go and have a read. So with what I've pulled out here from my current state of play with all the interviews that I've done, what do you recommend sort of the next step for me? And I mean, you could really it could be for the listeners as well, because if you guys have followed me through the journey and listened to all the interviews, you're probably in the same, you might have taken out different things, but you're probably in the same space in terms of the knowledge that you have. What would you say, what do you recommend as a sort of a next step to sort of try and get over some of these hurdles?
I think studying more on the mental part is more essential than trying to find out what technique works. And if you go into the direction wherein because people change because something emotional happened to them, not because you cannot talk logically to a person who's emotionally stirred up. It wouldn't change him. And so if we are to change into someone who's going to be successful in trading, then we need to dive into the core, which is managing your trades and managing your emotions. And managing your emotions is not easy because emotions cannot be managed. It's an energy in motion. It's emotion. That's why it's emotion. But there is, like water, you need to just channel it. And by channeling it, what I mean is that you if I would be blunt, we need to stop trying to find out new techniques and just focus on believing that trading is simple, but it's not easy. It's as simple as it gets. You pick a skill that fits you and then do the work. Find out, because in my experience, not every technique works on every currency. A 24 moving average will work on this currency but will be different on this currency. So how you cannot that's the reason why most automated trading systems doesn't work, because sometimes it's either they put that system in a wrong currency, or sometimes they have just inputted the wrong parameters. So it's a matter of trying to find out where you're at. You must know who you are, and then that's a starting point. And so after you found out who you are as a trader, then that's the time that you get the skills. That's the time you get the money management mentality. And then finding a mentor that really would teach you. I think there are a lot of mentors that would teach you for free. And those people just like the internet, just sort them out, because some mentors are just there to feed their ego and doesn't really want you to succeed. They want themselves to feel better. But there are people out there who'd be willing to teach you, and most of the time their advices are really simple and you wouldn't want to believe it. And so being able to have a heart that listens, being able to have a heart that really wants to succeed at this is, I think, the key. Because if you have the proper heart for trading, you would succeed in this.
Cool. Great advice. Thanks, Harlan. Look, thank you very much again for joining me here today and running through the sort of wrap-up of my 52 Traders podcast episodes. And the show carries on, guys. I have got more interviews coming up, so keep an ear to the ground for those. Remember to leave a review on iTunes to help the podcast. And if you want to read this full article, which I do recommend you do, jump onto 52traders.com/top and you'll be redirected there, or you can jump onto topshelftraders.com and you should see it there somewhere. And I will also put a little link on the blog as well. So if you jump onto 52traders.com and search for Top Shelf Traders, you will get access to this as well. So, guys, jump on there. Once again, thanks, Harlan, for joining me here today, and I wish all my listeners out there trading happiness and success. Okay, guys, that was a long one. Thanks for sticking around. Hey, look, if you're still here, we did touch on automated trading during the show, and I just want to remind you there that I have got another website called automatemytrading.com. So if you jump over there, you'll be able to see me automate a trading strategy in under 45 minutes, and you'll get to keep the bit of software that I created as well. So jump onto automatemytrading.com, and you'll see the opt-in form there. Okay, guys, thanks for listening. See ya. Bye. As I said, guys, what a great interview with Harlan. The stuff that he actually shared with us was incredible. If you do want to pick up that ebook, head over to TradingNut.com, sign up as a member, or if you're already a member, and you can do that, through the free trial link at the top of the site. If you're already a member, it's in the members area under the free gifts. So check that out, guys. And last but not least, if you do want to hear more episodes of the 52 Traders podcast, then whilst you're there, you can either buy individual episodes or you can get the whole lot, have the full experience, or if you sign up to the Robot Traders Club, you actually get a credit to buy one episode as you join, and then you get more credits for doing stuff as members. And look, just a reminder, I do build out full strategies for people, for guys that have come on board, automate it, and we see how it's going to work and if it's something that can be used and sustainable in the markets in the future. So guys, check it all out on tradingnut.com. I'll see you next time.